Hey, it's James here, and in today's video, I want to talk about the scenario that could potentially take Bitcoin to zero. Now, before you freak out and say, oh, James is just a perma bear, or before you freak out and say, this is another guy calling for doom and gloom. No, I'm not saying it's going to go to zero this year. In fact, I do not think it will go to zero this year. I think that at some point in the future, it is likely to retest $100,000, even if it falls 90% first. What I'm talking about is a longer time horizon. And so I want to walk through this with you because I still believe there's opportunity in Bitcoin, but I also believe that Bitcoin is a bit of a hot potato. And so, it's like the game of musical chairs. You don't want to be the last one standing. So I asked AI to kind of give some counterpoints to this. I'm going to walk through my points, then I'll walk through the bullish counterpoints so that you have both sides. And then you can take that information and kind of dig deeper and do your own due diligence with it. So my essential theory is this: by 2040, 99% of all Bitcoin will have been mined. In fact, AI says really closer to 2032 to 2035. 99% of all Bitcoin will be mined. What that means is that the miners are going to be getting a very, very small amount of Bitcoin as a mining reward. And what they typically do is they sell that Bitcoin that funds the operations, and then, of course, also put some profit in their pockets. For those of you that don't know, of course, I used to be a miner. That was my initial foray into crypto. I started mining on a hobby level in 2014 in January, and I started mining on a business level where I actually had to pay like self-employment tax and the whole 9 yards in 2017, in May of 2017. So I understand how mining works. Okay. I have much more knowledge about that than your average Bitcoin believer on social media because I've actually done it. And it wasn't a huge farm with millions of dollars invested. It was about a $30,000 investment to set up what I did. All right. So it was just a server room essentially at my home. It was like a 300 square foot room that I set up just for mining, and I spent about 30 grand doing it. So I understand mining. That's the thing. There has to be enough, like the Bitcoin you get from mining, the price has to be high enough that you can sell it and make money. And what happens is when the price of Bitcoin falls below the cost of production, then some miners shut down. And so the difficulty rating gets adjusted, and essentially it becomes more profitable to mine for those that are left. And that kind of maintains the network. Okay. So that way, not everybody stops mining. And then when Bitcoin price goes up, more miners come back online, and it just readjusts all the time. So in theory, that works really well, unless price stays depressed under the cost of production. When Satoshi originally designed Bitcoin, the idea was that by the time the mining rewards were like just tiny little fragments, that Bitcoin would be essentially a currency, and that enough people would be using Bitcoin to purchase goods and sell goods, that the transaction fees themselves would then become how the miners got paid. So far, we have not seen that happen. Very few businesses actually take Bitcoin. And the businesses that do, most of them are using third-party networks to take Bitcoin. So it's not exactly what Satoshi had in mind in the white paper. But okay, I think there was like 10 or 15,000 businesses last I heard that accepted Bitcoin. That sounds like a lot until you realize that there's millions and millions of businesses worldwide. So the upside of that is maybe more businesses come on board. But right now, it just hasn't been the case. And also, so far, it's not viable. You look at the average number of transactions that can be processed on Bitcoin, and it's a very, very small number compared to Visa. It's like thousands of transactions per second. Another thing that I haven't mentioned yet, but this is even an even bigger problem. So a lot of the miners, like really big miners, some of them have already pivoted away from mining Bitcoin because they are making more money by shifting their computational power toward AI. And so again, we have this pull away from mining Bitcoin because there's more money in AI. So in the future, it's not just going to be, hey, will I make a profit mining Bitcoin, which is what it was in the past, right? Is mining Bitcoin profitable? In the future, it will be, is mining Bitcoin more profitable than putting my computational power toward AI? So we can see your public miners are shifting power to AI data centers where revenue per megawatt can be 10 to 25 times higher with stable long-term contracts. Cumulative AI deals are greater than $70 billion. Some miners could hit 70% plus revenue from AI by the end of 2026, and this diverts infrastructure and capital away from Bitcoin. Hash rate declines and security strain. First quarter of 2026 saw the first quarterly hash rate drop in years from I don't know what ZH is, whatever that is, peak downward. Ongoing pressure creates a hash rate vacuum. Lower dedicated binding power raises 51% attack risk as the security budget shrinks in real terms. First of all, let's be very clear. This is nowhere near the level where 51% attack is a likely occurrence. And if you don't know what a 51% attack is, essentially if somebody can achieve 51% of the hash rate, they can do things like basically cheat and create transactions that weren't there and do all kinds of really underhanded stuff to basically get clone Bitcoin, essentially, which would be bad, right? Really, really bad. And basically, it would be catastrophic to the network. But to get a 51% attack, the hash rate's going to have to draw way lower than what it is today. So we're nowhere near that point. Death spiral potential. Unprofitable miners shut down. Hash rate drops. Difficulty adjusts. But overall security weakens. Confidence erodes. Price falls. Even fewer miners stay. Fees can't catch up. And I initially told AI my time horizon was 20 years. By your 20-year horizon, this could lead to network failure if adoption doesn't deliver. So these are the bare points. And this really does a pretty good job of summing up. I had a conversation that was longer than this. This pretty much sums up my thought process. My thought process, there will not be enough adoption in Bitcoin, and eventually Bitcoin's network will fail. Not because it's necessarily bad, but just because there's going to be other opportunities that companies want to chase versus, mining Bitcoin, which is a major, major pain in the neck. So counterpoints, these are the bullish counterpoints. So gradual transition plus automatic adjustments. The subsidy fades over decades. Final coins in 2140, not abruptly. Difficulty drops when the hash rate falls, restoring profitability for efficient survivors. Inefficient rigs die, but the network persists. Again, this is how it's designed, right? As some miners go offline, the difficulty gets adjusted, and then the remaining miners are happy. And then, of course, the profit's there. Some new miners come in, and that's the way it's supposed to work. Fees can and sometimes do scale. High value settlements or demand spikes already push fees above subsidy temporarily. If Bitcoin can reach multi-trillion-dollar market cap with more on-chain anchoring, even modest congestion yields huge USD fees. Historical halvings were survived via price appreciation and efficiency gains. That's a mouthful, essentially, if more people adopt Bitcoin. Not total abandonment. Many operations are hybrid, flexible switching, private miners, new entrants, cheap, stranded energy, and state players backfill gaps. Bitcoin mining revenue still vastly outpaces current AI contributions for the sector overall. Hash rate has recovered from worse, right? Like when China banned mining. Price appreciation as a savior. Higher Bitcoin price multiplies the value of remaining subsidy plus any fees. Models show that sustained price growth can maintain or even grow the real security budget, even if the subsidy halves. So what that's essentially saying is if price keeps going up, then it's not a problem. And I agree. If price keeps going up and up and up, then of course mining is going to be profitable. Empirical resilience. Miner capitulation is cyclical, seen in 2018 and 2022. Post halvings, hash rate trends upward long term despite volatility. The thing is all of the bullish counterpoints are really saying, well, historically, this is what has happened. Historically, prices went up and it's been okay. Historically this and historically that. The reason that I find that falls short is because historically, we have been in a global macro bull market since 2009, right? We have been in a raging bull market in equities. And so the risk on appetite has been very strong. And so every time Bitcoin had a bear market, it was immediately bought back up. Of course, we'd have the 80% drops. It would be immediately bought back up. But we can't look at that and say that's what's always happened, so that's what's going to happen in the future. It is very likely that at some point, my opinion, some point very soon, equities are going to enter a macro bear market that lasts multiple years, possibly as long as 2 years, and then take possibly as long as 10 to 15 years before new all-time highs are reached. We do not know what Bitcoin will do during that period. It is entirely possible that Bitcoin struggles to recover from that. And so we're being hit from multiple angles because we're being hit from, what if there's a macro bear market? And then what if that computational power shifts to AI, and all these things kind of create this potential storm that could eventually take Bitcoin to zero or near zero. I think it will always be, kind of played with by, a few, like a small segment, just because even before it was mainstream, there were people who were trading it for fun for just a few pennies. So when I say zero, I mean essentially it's adoption dies and it becomes more of a novelty than any, serious uh, financial instrument. Like I said at the beginning of the video, I still view Bitcoin as an opportunity in the near term, meaning over the next probably 5 years. I think there's going to be a point where it's worth accumulating. I think there's going to be a point where it's worth selling. And given the information that I have available to me today, my plan is to participate in one more cycle, try to buy some Bitcoin at some really great prices, sell that Bitcoin at some really great prices, and then I probably won't touch Bitcoin again ever, because long term, I truly believe that Bitcoin will fail. Now, I'm not asking you to believe the same thing. I'm only doing this video to educate you on some of the different things out there. And then if you're really serious about this, whether you're a bull or a bear, I really suggest that you go out there and you go deeper down that rabbit hole on your own and really look at all the angles, because a 10 or 15-minute YouTube video is not enough to make a financial decision on. If you enjoyed this video and you enjoyed data-driven content, make sure to give it a thumbs up and subscribe to the channel. As always, please remember that I'm some guy. I'm just sitting in a spare bedroom. I'm bored, so I do some videos for fun. Nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for make any type of investment in cryptocurrency, the stock market, precious metals, forex, or any other tradable asset. And as always, most importantly, believer or non-believer, risk management is key. So please, please, please trade and invest safely